Today, we're going to be talking about, should you invest in real estate? Should you invest in stock? Which is better? Which is worse? Are they the same? There's a lot of different ways to look at this. And to start with, I'm going to ask my partner, Brian, to give us his opinion because he owns both.
I think it largely depends on what your level of risk is, how much, money you have to invest. But, for me personally, I'm actually invested in both. I'd say real estate's probably more like 60-40 relative to stocks. Nice part about the stocks, obviously, is that they can be super passive, obviously, but you still have to watch the market if you're doing like any kind of single stock picks. I have probably at least about half or a bit more in essentially index funds, and then another portion in individual stocks that I view are fairly stable that I monitor every now and then a smaller portion of that is in ones I do a little more risky but have a lot of room for growth and stuff and could possibly pay off real long run. As far as the real estate goes, it's definitely not as passive, but I find it's actually not too bad. And I actually own a handful of real estate, mostly multi-units, and for right now we basically manage them ourselves, but most of the buildings are essentially like we have like a couple duplexes, a 3-unit single family, so on and so forth, where it's not terribly intense. It's not like a 16-unit building or anything like that, and you just have to be aware that like maybe a few times a year we might have an issue pop up. Usually they're relatively easy where I just have to pop on the phone and essentially text a handyman that we use, and 9 out of 10 times he can fix those relatively quickly and easily. Maybe 1 out of 10 times there might be an oddball thing where you have to call in like a specialist, like if you have like like an AC unit that craps out or something along those lines right there. But again, 9 times out of 10, it's literally like a few minutes of my time, and even then it's usually only a few times a year. The only thing that takes a little more time, obviously, is if a renter moves out and we have to show a unit. Obviously we have to place a new ad, we have to do the showings, but we try to do it almost like an open house style where we try to have all the showings within a short amount of time, so we don't have to bother the tenants and we don't have to waste a lot of time going back and forth, which is something I learned on my first one, that I didn't like scheduling a dozen walkthroughs. So next time we tried to make them all in one. So I found, could I make it a little more passive and have like a management firm? Yes, but I find with them, you're probably paying a minimum of basically 10% out, oftentimes closer to even a fifth. And I just found it wasn't really worth it to me at this point because, again, there weren't enough issues popping up where it really took up a ton of time. And what I personally do on the real estate side is, I basically pay all in cash because I'm looking for mostly cash flow with like the rentals and all that. And the appreciation is obviously a big bonus. But I first and foremost focus on the cash flow rather than the appreciation, because if something goes bad or if the market has like a little downturn, not a huge deal because the cash flow is still there. If the market has a big upturn like it has in the past year, that's a huge bonus. I've had most of mine have actually increased in past year probably by about like a third. On the low end, probably at least quarter. So like major appreciation, but I don't really view that as much of anything other than basically breaking points, because again, I'm looking at the rent, the cash flow right there. And I like that because I view it as it's relatively safe. I'm investing more in my local area where I kind of have a feel that, there's multiple big businesses around here. If 1 or 2 go under, which, would be unlikely with these guys, it still would be a lot of employment opportunities. It's a university town. So there's, again, lots of students too. So again, very safe in terms of that right there. Whereas as far as stocks, obviously if you throw it into an index 500 fund, super safe in the long run, but might not be safe in the next 2-3 years, but over the course of 5 years or a decade, absolutely safe there. So I'd say if you have the funds, definitely try to invest at least chunk of it onto the real estate side if you have an appetite for that. If you're shorter on the funds, stocks definitely the way to go. There is something that's kind of a mix of both called an REIT, which is kind of like, it's almost like stocks but for basically real estate investing firms and such. And I find with those, it can be a good way to basically dabble your feet into the real estate market, but it tends not to be nearly as big of a return as if you own it yourself. So if you have the funds, I would go that way. But again, diversify your portfolio and don't invest in stuff that will, completely take the time away from, your main business or whatever you're currently doing right now. And Sean, I know you probably defer a little bit more than me. I know you used to have more real estate. Now you're much more on the stock side. So what are your thoughts on that?
Well, I think that real estate continues to be a good investment and will be. Like everything, stocks, bonds, real estate, crypto. I mean, everything goes in cycles. And I think one of the biggest things you have to look at is where things are in the cycle as to whether or not it's time to go all in, whether or not it's time to buy. The truth is you could buy at the wrong time, and as long as you're going to hold for the long term, you're going to win in the long run. I think that's a thing that a lot of people miss out on. For instance, earlier this year, you could look on Facebook and see that the stock market was crashing. And primarily the people writing that were the people that were bashing the Democratic government and saying that, Biden's ruined the stock market, right? And yes, the stock market had come down, but not that I'm necessarily a fan of Joe Biden, but he didn't personally destroy the stock market. He's also not going to be the guy that personally fixes the stock market. There are other forces at work, of course. I think that you have to look at where things are and say, wow, is it getting frothy? Do I feel like I'm buying at the peak? Everybody's buying. The news says everybody's buying. There's a thing you can look at called the Fear and Greed Index. Just Google it. And you can see that it's like, hey, everybody thinks that market's going straight up and everybody's buying. Well, that usually means we're getting near the top temporarily because everybody knows you should buy, so everybody's bought. And a better time to buy is when things are going to be lower. Same thing with real estate, same thing with bonds, because by the time everybody decides it's time to buy, then you're usually kind of, missed the better profit opportunity. But again, hold it long enough for most things, especially if you diversify, you're going to be a winner. Now, if you jump into one of these meme stocks, like, AMC or one of these things where the market is getting whipsawed around and it just seems like, oh, it's going straight up. It was 20 and now it's 200. And boy, I got to get in there before it gets to be 400 because everybody says it's going straight up. Go look at that chart on those one day. Just go to like finance.yahoo.com and look up the AMC chart or any of the other meme stocks. And you will see that, yes, if you got in early, it went straight up. And then you're going to watch it. It looks like it fell off a cliff because when it implodes, and it will from these frothy, overvalued numbers, then it just is a disaster. And you don't want to be in the disaster part, especially if you're not watching all the time, you're not setting stop losses to get yourself out real quick. You could be the guy that bought in at 400 or 389 and tomorrow it's now 200 and the next day it's 97. So you don't want to be that guy or girl, right? You want something that as you invest, especially if you're not going to be a full-time paying attention to this, you're investing so that you can win the long run. You're going to buy solid assets that over time are going to appreciate, and when you want to tap into them for retirement or to put a kid through college or to switch and buy another asset, or maybe you have an opportunity to buy a business that complements yours, that those assets are there. I personally don't like to manage real estate because I don't want to take the time away from my business and leisure pursuits, but certainly you can do it. One of the things that I found in working with real estate investors as an attorney years ago is that you will get to a size as you buy real estate where you're kind of sucked into it's at least a part-time job on a consistent basis, and you'll get to the point where you either need to hire someone or you need to outsource the management and the maintenance for the properties because you have a lot of properties. But this is a good problem. I mean, that means you have a lot of units and you should be making money, and as Brian mentioned earlier, cash flowing those units. I don't think that it's a good idea to buy real estate where you have negative cash flow looking for tax benefits unless you have really significant income and assets and you're going to be able to use those tax breaks now or in the near future, because that just means you probably paid too much in a current market for that asset. But again, if you have financial advice and good accounting advice that says, hey, this is a great idea, then go for it. But positive cash flow overcomes a lot of issues. The other thing with owning, as Brian has mentioned previously, multi-unit buildings, even just small ones with maybe 4 or 6 units in them, is that they're unlikely to be vacant with lots of units all at once. I mean, maybe you might get 1 or 2 that cross over, but you're not going to have an empty building. You buy a single family home, you rent it out. When it's empty, it's empty. If tenant moves out and you've got to do some updates and do some things that mean it's empty for a month, then you got to go get a tenant, it's empty for another month. That really hurts if you need the cash, and that makes that a bit more risky than, again, diversifying. And I know in this talk about investments, I've said the word diversify at least 50 times, and if we make more of these videos, I'll say it 50 more, because it's going to keep you from ever getting in a position where you feel like the whole thing was not worthwhile. While the market is moving, you're going to see some things go up, some things go down, some things adjust. But overall, if you get in, then in the long run, all those things that are adjusting are just going to keep moving upwards, and you will be the winner over time from just investing, period, and not spending all your money or wasting it. Or, by the way, worse yet, and we didn't address this, I don't think, previously, Brian, which is putting all your money in the bank because you're afraid to invest because you know that the stock market is a scam and real estate estate is a scam and everybody's out to steal your money, and you're just going to put it in the bank because that way it's going to be safe. Here's the problem with that. Right now, inflation is rampant, right? I mean, it's been above 10%, pretty high. But even with where the Fed would like to target inflation to be down, in the low single digit, that still means that every year the cost of assets, things you want to buy, are going to go up in value. Whether it's real estate, cars, washing machines, or food, they know that that's going to creep up every year. If your money is fixed at zero increase, and every year the cost of everything goes up, let's just say 3%, and without even compounding it in 10 years, it's gone up 30%, then your $100 that you put in the bank or stuffed in a mattress to keep it safe is worth $70 or less in real money. You fall behind. And that's one of the biggest reasons you need to be invested in something that will appreciate. Stocks, bonds, real estate, whatever, because if you're not, inflation is eating up the value of your ability to spend money. And especially as you get closer to retirement, this is a big retirement mistake people will make is they get near retirement, they want to get really conservative. And they're like, okay, so if I take my money out of the stock market, I'm going to protect myself from the downside. Well, the problem is you go to retire and you're going to live another 20 or 30 years, and inflation is going to eat up your saving when it didn't have to, when you could have been conservatively invested in the market in the long run, meet or beat inflation and keep the spending value of your money by doing that. So don't think, the safest thing I can do is to lock my money up, put it in the vault, stick it under the mattress, wherever you hide your money. So diversify, or Brian, you could diversify.
Yeah. I've seen a lot of people make that exact same mistake where they're super conservative on investing side. So basically to the point where they don't really have investments. I mean, maybe they'll have like a retirement account that is invested for them and such. But if they have a stockpile of extra money, they literally sit on it because they think, hey, this is the safest. It won't get hit. If stocks go essentially down, or if real estate crashes, their money's perfectly fine. And problem with that thinking is you will always lose. So you might not lose immediately in the next year, but over the long run, you'll always have that inflation. You'll always be losing like little by little each year. In some cases, a lot more. Like the last year, you would have lost a lot more. But it's just one of those things where we're not saying invest everything. You always want to have like a safe stockpile and all that. But definitely, you have a ton of money sitting around. You don't want to just have that be sitting there in like bank account that literally earns you nothing. Where inflation eats that away. Where literally you're losing money each and every single year by basically doing what you think is safe, because in reality it's actually not. It's a guaranteed loss in the vast majority of cases there. So with that, guys, if you like this video or like any other topic on how entrepreneurs can make more money, whether it's with their own business or with their extra income, make sure to like and subscribe to our videos. And with that, hope to see you on the next one. Thanks.